Alrighty, traders. So I have something really special for you today. I know I've just recently finished off doing a video on, giving you guys a bit of tough love when it comes to the markets and so on and so forth, and freaking out. But what I've got to share with you today, you're going to absolutely love. So make sure you watch the entire video, because I'm going to share with you the one biggest reasons. There you go. There's good grammar for you. The one biggest reason why we are going to see an explosive move in gold over this next 5 to 10 years, and why it's really possible that we see a $15,000 or $20,000 plus, maybe even higher gold by the end of this decade. And I'm just going to share with you my thoughts. You may disagree, you may agree, but let me share with you what I'm seeing here, guys. Let's get straight into it. Don't place a trade based on what you're seeing in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty, guys, so let me get straight into it right now. Guys, if you haven't done so, make sure you grab that $7 trading course. If you actually need help with your actual trading side of things, then that $7 course is here to give you that breakthrough. Now, let's move that trading mentality aside. Let's look at long-term wealth and long-term big trends, right? Because big wealth is generated from big long-term trends. Now, as you can see, and I'm doing this video today, but let me blow this up here. This is obviously gold right now. Gold's not open yet, but Winston Churchill said, the further back you can look, the further forward you can see. Now, if you read any of Ray Dalio's stuff, if you understand all the major moves that happen, and things that are happening right now, if you read Ray Dalio's stuff, and even if you look at Mike Maloney's Hidden Secrets of Money, big. I'm so grateful for Mike Maloney, and even people like Ray Dalio, because they provide you a history, a template for us to go get access to really see that history repeats over and over and over again. And if we can stand back from the 10,000 foot view, not the 1 day view, what I was talking about earlier on today, that we can start to see that there's cycles to everything, right? The further back we can see, the further forward we can see. Now, hear me out. What's happened with gold? What's happened in life, right? In life, we understand if you've lived for quite a bit of period of time, you'll know that everything goes in cycles. There's booms, there's bust cycles, there's massive long-term cycles, there's 50-year cycles, 70-year cycles. There may be even yearly cycles for you as an individual, right? We all have our own cycles. I know for myself, every year I start to go into different modes and mentalities at certain points throughout the year. And so recognizing those cycles and so on and so forth. So here's the thing. Here's one thing I've always thought about when it comes to gold. Right now, we know that major governments are buying major gold and silver when it comes to what's going on right now in the economy, especially this decade, right? So we know that there's major governments buying just a boatload of gold. Now, if everything goes in cycles, right? History repeats itself. If everything goes in cycles. And what I've always actually said to my private clients is this, is that I've seen so many times over my trading career, and looking at history from even Ray Dalio stuff, and I'm going to share something with you guys that's just going to be like, wow, you can start to see where things are going and why gold is just one of those things you want to be holding on to for this decade. Is that if once was, which was hard money, which is gold, which is linked to paper, okay, that was gold backing. And then suddenly we went off the gold standard, and then suddenly we went on to a fiat money, right? Or, and then suddenly, we went into the fiat monetary system, which was no longer convertible to gold, which happened in 1971, as Nixon, spoke to the nation and so on and so forth. You guys have probably seen that in the past, right? So I'm not going to I'm not going to go into that any longer. But here's the thing: if everything goes in cycles, if what is happening right now is not what was, right? What was what? A gold standard. But what's been happening since 1971? not a gold standard. So if not a gold standard right now, and this I've always thought about this, if not a gold standard right now is if it is we're getting towards the end of that. We know that, right? If you've been watching what's been going on from a 10,000 foot view, if you're a younging, like if you're in your mid 20s, you probably even don't give a shit about this. But if you're in your mid 30s, maybe even get into your 40s, you will start to see how things are starting to shape up, and you've been doing a lot of study of where things are going and so on and so forth. So if once was is not what is. But I believe once what was, which is a gold standard, is going to be, and what is not going to be. So what was is not what is, but what was is what's going to be, aka cycles, right? It's simple cycle analysis. So again, I'm using this point here. So we just booms and busts, booms and busts, booms and busts, right? So I look at things like as cycles. Now here's the interesting thing. I've been reading Ray Dalio's obviously come out with a new book about understanding currencies and the rise and declines of empires and so on and so forth. But let me share with you this here that I've been reading. I think it's going to be really, really interesting for you guys. Now, let's go through here, right? So I'm reading through the table of contents of this book here, and if you just go to principles.com, you'll be able to start getting access to this as well too. But let me actually share this with you here. So he talks about the long-term debt cycle. Let's start with the basics, right? So chapter number 1, it's about the beginning of low debt, what was, and hard money, which was what? Gold. When societies first invented money, they used it for all sorts of things like grains, hair, beads, but mostly they used it for intrinsic value like gold, silver, copper. Let's call that hard money. Gold and silver, and sometimes copper and other metals like nickels were preferred forms of money because 1, they had intrinsic value, and 2, they were easily shaped and sized into portable so they could be easily exchanged. Now, I won't go into too much here, but 1, we have again, let's go through the cycles, right? Because the further we can look back, the more we can see, okay, this is why things are this is where we're heading, and this is what's likely to be the cause-effect relationships. The cause is where things are going. The effect is what's going to be the effect on different asset prices. So 1, we started off with gold standard. Number 2, then comes claim of money, hard money, aka notes of paper, right? Then we started the fiat money system. 3, then comes increased debt. And I won't go through that too much here, but let me go through this here. Then comes debt crisis, defaults, and devaluations. This is where we're at right now. Debt crisis, this is what we know right now is coming towards the end of this whole debt system, right? We know there's going to be defaults, there's probably devaluations, restructurings, revolutions, civil wars, all that sort of stuff, that where we are headed right now. If you understand anything about history, especially thanks to Ray Dalio, and I'm just so grateful, really, really, really am grateful for him. He really has laid this out, guys, and we can start to do so well from understanding where we're going. So we can see that's where we are right now. Look, but then look at this here. So what comes next? What comes with now this defaults and the defaults, devaluations, restructurings, civil war, all that sort of stuff, that doesn't happen straight away, right? It's a slow process. It might take a few years. It might take 5 years. It's probably gonna take this entire decade for that maybe to unfold. Maybe it's gonna take just only a few years. I don't know. But we know where things are going. We don't know timing of things, but we know where things are likely to go, right? Which is exactly what I said there. Now, but what comes next? Whether it's this whole process, number 4, is whether it's 3 years, 4 years, 5 years, 10 years. What comes next? What is the next thing? Well, the next thing is what? Then comes a fiat money, right? A fiat money, which is, central banks wants to stretch it, money, so on and so forth. So we've actually got from that there, and now we go to fiat money, right? Now let's actually go to this here. So the next point after the fiat money is what? Let me actually do this down to here. I just wanted this here. Then what comes the next step after that? Which is what? Then comes a fight here, and this is the main one that I really, really wanted to get into, right? At the end of these stages, the devaluations, the printing of money, all that sort of stuff. What comes next? Then comes the fight back into hard money. Look at this here. Let me see if I can do this here. I'm just trying to zoom in a bit more. Here we go. Down a bit more. Then comes a fight back into money. When taken too far, the overprinting of fiat currency leads to the selling of debt assets and the earlier described bank run dynamic, which ultimately reduces the value of money and credit. Basically, what he's saying there is basically the printing of money is now devaluing the dollar, which prompts people to flee out of both the currencies and debts, e.g. bonds. This is something that Mike Maloney also talks about as well too. If you've seen his Hidden Secrets of Money, I think it's his last. I think it's maybe number 7. I think it is. He also talks about that as well too, where people are going to start to lose faith in the currency. So let's actually continue here. They need to decide whether alternatives still hold the wealth they will use. History teaches us that they typically run into that they turn to gold. History teaches us that they typically turn into gold or other currencies, assets in other currencies not having these problems, and stocks that retain their value. Some people think that there needs to be an alternative reserve currency to go to, but that's not true, as some dynamics of the breakdown of the monetary system and the running to other assets happen in case in which there was no alternative currency to go to, e.g. in China and in the Roman Empire. The debasement of the currency leads to the devalue, and people have to run from it and debt denominated into something else. This is the whole itinerary of things people run into when money is devalued, including stocks used for construction. In Germany, Weimar Republic. There. Here's the thing. Typically at this stage of the debt cycles, there is an economic stress caused by the large values of the gaps, which if you've been hearing about the wealth gaps here, which leads to higher taxes, which we know what's happening right now with Biden, right? Higher taxes and fighting between the rich and the poor. That's already happening right now. Which also makes those with wealth want to move to hard assets. So say that again. There's a fighting between rich and poor, which also makes those with wealth, the top 1%, want to move to hard assets and other currencies. That's why people are fleeing right now into gold. That's why gold overall for the last 2 years has been up. Yes, we've got our pullbacks, but we've been up because people are running for that. Plus, also they're buying real estate as well too, and other countries. Naturally, those who are governed by the countries that are suffering from this flight from debt, which is America right now, their currencies in the country want to stop it. So at such times, the governments make it harder to invest in assets like gold, which is really interesting, right? So, because we know that they confiscated gold a while ago as well too. I forget exactly when that was, but such as times, governments makes it harder to invest in assets like gold, which I'm not sure whether they're going to start to put a pause onto that, but it's going to be really interesting to see what actually happens there, right? E.g. via outlawing gold transactions and ownership, which we know they if you heard about that, they actually banned gold there. Foreign currencies via eliminating the ability of transaction in them, and foreign currencies via establishing foreign exchange controls, etc., 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 etc. Right? Now, here's the thing. When this becomes extreme so that the money and credit system breaks down and debts have been devalued or defaulted on, necessity general complies governments to go back to some form of hard currency to rebuild faith in the value of money as a storeholder wealth, that credit growth can resume. Quite often, though not always, the government links it to money such as hard money, e.g. gold or other assets here, right? So you can see what's happening here and we keep going through here, and you can just keep going through, so I won't keep going on about this, but I've actually read through this, but let me actually this through here. Through these cycles of debt and writing off debts have existed for thousands of years, guys. So what I'm saying here right now is what Ray Dalio's talking about is not something that's, look what's happening right now. I wonder where we're going. It's like, no, we're likely to go here. So what's likely to happen? Gold's likely to be taken off like a rocket. and in some cases have been institutionalized. For example, the Old Testament provided for a year of Jubilee every 50 years in which the debts were forgiven. Knowing that the debt cycle would happen on the schedule allowed everyone to act irrationally in a rational way in preparing for it. Helping you understand this dynamic so that you can prepare for it rather than be surprised by it. It is the main objective behind the writings. Because most people don't pay attention to this cycle much in relation to where we are experiencing. Ironically, the closer people are to the blow up, the safer they tend to feel. That is because they have held the debt and enjoyed the rewards of doing that and the longer it has been from the time since the last blew up, the more confident they have because because the memories of the last blow up fade. Even as risk and holdings these debt rises and the rewards of holding decline, by keeping an eye on the amount of debt that needs to be paid relative to the amount of hard money that is there to pay for it, the amount of debt payments that have been made relative to the amount of cash flows for the debts have to service the debt, and the interest rewards that one for is getting lending for one's currency, and one asset's risk rewarding, and so on and so forth. One can assess that the risk reward of unfolding the time bomb. So what I've just gone through here, and I've been reading this actually, and I'm just like, wow, I want to share this with you guys. I don't know why, guys, but the charts have been telling me, and you guys know I've been doing videos about these long-term bull markets in gold, but now I've been reading history and really digging into this. You can see that the reasons why, this is the one massive reason why gold is going to explode this decade. So I hope this helps you out today, guys. I hope you can see where we're going. If you're a trader mentality and worrying about, oh, look what yesterday did or last week did, you're missing the big picture of where gold is likely to be. So I hope this really helped you out today, guys. If you need my help or if you want some help, make sure you grab that trading course for $7 below, and I'll see you guys very soon.